California is a one-party state. It's very likely this will pass both the Assembly and the House, and it sits at the feet of Gavin Newsom. Now, Gavin, the governor, wants to run for president in 2024. I'm wondering if he might veto this because it's not going to look good for him to run. He's going to get a lot of people in the country saying, this guy took away my Uber. And of course, in California, his base is tech. The tech people aren't going to want this either. So we'll see what happens.
Stephan, I'm curious for your thoughts to respond to that before I want to ask you both about WeWork. But what do you think about what's happening in California?
Well, I mean, I think that California is usually at the forefront of social causes and social needs and sort of union mentality. And I think that what they're pushing for may not be unreasonable. And I think that it is going to make the unit economics for Uber and Lyft less palatable in the short run. But the good news is everyone's going to get hit with this. So all the prices will go up. And what will happen is instead of having these types of companies' losses subsidized by private investors, customer prices are simply going to go up a little bit more and will become a little bit more even with taxi services. So the next question is, well, are those services still going to be more convenient, even if they're at the same cost of taxis?
And
I think the answer is probably yes.
To me, that's a major demand problem, right?
Well, I think less so than you imagine, because whenever I get to the airport or need to go to the airport, I still find the apps, the utility of those apps far higher than trying to use the equivalent for licensed taxi cabs.
Wow. All right, guys, thanks on that. Again, watching those shares and those levels very closely. This is also as WeWork is launching its IPO roadshow as soon as next week, reportedly. I want to play, again, another Sam Zell soundbite from this morning. This is what this real estate tycoon had to say about their business model. Take a quick listen.
The idea that these companies should have multiple votes or
multiple
controlling
class.
a company forever or not being accountable, it just doesn't make any sense to me. WeWork is just taking it to an extreme that nobody's ever seen before. Every single company in this space has gone broke.
Duncan, how do you respond to that?
Well, first of all, he is right on the governance. This is very extreme corporate governance, so the market will look at that. But I think when you looked at his full remarks, he compared this to the S&Ls, and that's crazy. With all due respect to Sam, the S&Ls were doing fine as real estate businesses until the government changed the rules in the 1980s. Then they got in trouble. That is nothing like what's going on with WeWork. WeWork is much more like the Regis company parent, IWG, which is a profitable company, although not growing very fast.
Yeah, it doesn't have a tech
What we have
multiple.
here is,
yeah,
well, WeWork is growing fast and is getting a multiple based on that. And yes, it's trying to argue for a very high tech multiple. That may be a bit of a stretch.
Stephan, would you be an investor in WeWork?
Well, I would say the same thing that people asked me when they said, would you be an investor in Uber and Lyft at the IPO? And I would simply say that usually all these money-losing companies are being subsidized by venture capital firms and large private equity institutions, and they're usually at peak valuation at their IPOs. So if you're going to buy in, you got to be ready to hold on for multiple years until they prove out they can really generate the profits. So is WeWork going to really generate the profits? I don't think any faster than Uber and Lyft are, but do I believe they're green fields? Do I believe they're reinventing business models that are so convenient that customers are going to like them even through recessions? And the answer is yes.